Good day, Team GCI. I'm Brad, and in today's GCI Market Outlook, let's take a look at the Forex trading on pound dollar, euro dollar, the S&P 500, and gold. In our last video 3 days ago, we talked about the possibility of a weaker US dollar and how it might happen and what might happen. We looked at all the possibilities, and our favorite pair was pound dollar, and here is why. Price action had formed a falling wedge, which is a bullish pattern. Also, if you remember the economic calendar from this week, most central banks, including the US Federal Reserve, had interest rate decisions and speeches which always drive the market. If you are an intermediate or expert trader, you will know exactly what I'm talking about. If you are new to trading and you think that this stuff is too advanced for you, trust me, it's not. Just stick with me and I will explain as much as I can in every video. You may think that you could ignore fundamental analysis and just use technical analysis to guide your decisions. Sometimes you can, but the economic news and fundamental analysis always beat technical analysis. So, this is what happened to pound dollar and all the US dollar pairs, including gold. The US Federal Reserve did not change their interest rate this week, but in the FOMC speech afterwards, Jerome Powell announced that they will pause and start to lower rates in 2024. Look what happened. A 270 pip move to the upside. If you missed the move up, don't worry. The idea now is to look for more opportunities on the way down. This is where our technicals come in, and we have the stochastic oscillator turning down from overbought, which is a bearish sign. Explore your other favorite technical indicators like MACD, but be aware that big moves like this can often confuse MACD. If we move out to the 1 hour chart, we can see that MACD is in fact bearish here, with the signal line exiting the histogram, but price action is consolidating. We might want to wait for a reversal pattern like a double top or a head and shoulders before we go short. Also, if we move out to the daily chart, we can see that the stochastic oscillator is overbought, but not ready to turn down just yet. What is important here, however, is this key level of resistance, and we need to be aware of these trend lines. You will see that all US dollar pairs have had the same reaction to the news, and euro dollar, for example, will offer similar opportunities, so continue checking out all the other pairs. We have the same situation with gold, which was already in a downtrend, and price action is between key levels. Again, check lower and higher time frames and wait for reversal patterns and technical signals before you go short. So, when Jerome Powell talks about lowering interest rates, investors like his attitude, and we can see that all major US indices are at or near record highs. This is also common this time of year, and we call it the Santa rally, which started early this year. There are two strategies here. One is to wait for a complete reversal, but we will need to see reversal chart patterns and some bearish indications first. The other strategy is to wait for a pullback, and investors call this buying the dip, with a buy position when price action falls to this lower trend line. We will keep an eye on all of these. That's all for now. Thanks for watching, and don't forget to like, follow, and subscribe, and feel free to leave a comment on what you would like to see in future videos. CFDs and FX are leveraged products, and your capital may be at risk.